All right, guys, let me show you how you can calculate stock target price, stock gross potential, and find amazing stocks with this simple model. As you know, there is three models to calculate stock target price, or some analysts call it stock fair value. This is DCF model, discounted cash flow, DDM model, dividend discount model. And the third model is the price income model, or some analysts call it ratios model. That's when you take a company's financial ratios and compare them to industry average or to closest peers and then calculate share price. Today we're gonna consider third model, but if you're interested in calculating stock fair value using the DCF model, you can read my guidance, detailed step-by-step instructions. I will put the link to this video below this video, so you can use this link, or under this video if you're watching this on Twitter, on X. So let's start using the third model that we're going to consider today. Is very simple model. You don't need to make a lot of assumptions, just extract data. The data is extracted with Financial Modeling Prep API. They provide wide market coverage, they provide great data points, and I've been using their apps for 2 years already, built 3 applications. So let us start. First, what you need to do, let's say I want to analyze Apple shares. This is their ticker AAPL. This is very simple table that I made. You can copy my table and make the same table. Then I take 4 of their close competitors. This is the tickers of their close competitors. Tickers are trading codes, as you may know. Then I need to take important financial ratios for the company. For this, I will use Financial Modeling Prep data points. And in Google Sheets, I open the Google Sheets. I will be doing everything in Google Sheets. You can also open Google Sheets. You install FMP services. How to install the FMP services, I will put instruction below this video as well. And after installing this, you basically go to tools for installing, extension, add-on, and then add-on. And after adding needed add-ons for Financial Modeling Prep, you're gonna have it right here in the menu. But again, I will put detailed instructions in the to this video. So once you've installed this Financial Modeling Prep add-on, just input this simple formula. Input this very simple formula. This is FMP K Matrix TTM, and the stock ticker TTM means trailing 12 months. It will download the K Matrix for Apple company. Of course, you should input this manually, the stock ticker, and the rest, you don't need to input anything. Just press enter, and you see great key ratios for Apple company. You see there is a lot of ratios, and you should do the same thing for close competitors. Let me just copy this formula, but instead of Apple share, let me put AMD shares over here, AMD, and now it is downloading ratios for AMD. Let me do same thing for other companies as well. And let's replace the ticker AVGO. And as you can see, we've downloaded all financial ratios. Now let's take important company ratios that we will need. I will not be using price to book, price to earnings ratios. These are basic ratios. I want to use some more reliable ratios right now at this very moment. I like, for example, income. Let's take company's income per share. Per company's share. TTM means trailing 12 months. It's the 12 months, including the 12 months period. So net income per share. It's company's income divided by shares outstanding. And let's just copy this over here, net income per share. This is our first number 1 ratio that we're gonna use. I'm taking only 3 ratios. If you want to make more complicated model, you can take 10, 15 ratios, 20 ratios, and then your model will be more reliable. But for the purpose of this video, I'm showing you only 3 ratios so that you can make very quick analysis and understand how the model works. But ideally, you should take more ratios, 5, 10, 15. More ratios you take, the more reliable the model will be. Just remember this. Then we will take, let's take second ratio. There is a free cash flow per share. What else we can take? This one, PFCF ratio TTM. It means price per share divided by the free cash flow per share. As you know, free cash flow is vital ratio in forecasting stocks target price using a DCF model, and the more free cash company has, the better it is. And we can take these vital ratios, price per share divided by free cash flow per share, trailing 12 months. Let's take this ratio. And the last ratio, let's take, no, price to book I'm not taking. Okay, enterprise value to sales, we can take this one. Or what else we have here? Let's see, let's find some return ratios. I would suggest, yes, this one, return on equity, TTM again, trailing 12 months. And now we can just copy those ratios for our share for Apple. And trailing 12 months, let me check that it's uploading correctly. 148, yes, perfect. It is uploading everything perfectly. Then let's take competitors. Our next step, let's have averages. Average for competitors. This is, let me make this beautiful. Let me copy these things over here. So these are the ratios for our Apple company. And now we will take average ratios. Let's copy same ratios, but now for closest peers, we will be taking average ratios. Why it's not copying? I don't know why. But let's make everything beautiful like this. And now we should use the formula average. This is the simple average. And now let's take net income per share, the average among 4 closest competitors, this one. And to do this, use a simple formula equal average, open this parenthesis, then click on the first one, then press Command key on your Mac, second one, third one, and fourth one. Select 4 of them, close the parenthesis and hit the go button or hit enter button, and you will have the averages. The same you can do for, let's say, average. The same you can do price to free cash flow ratio for other, this one. Amazing, perfect. So we have industry averages. Now let's assign the weights. The weight should not exceed 1 or 100%. So I mean the sum of all this, if I sum all the weights, they should equal to 1. The sum of those is 1. So if you have, for example, 4 ratios, you should assign 25% to each. Or to one ratio, you can assign larger points. For example, I like this ratio return on equity more than other ratios. I can assign here 0.6, for example, percent. And then for the remaining one, two, I should assign 0.2 here and 0.2 here. But for the purpose of this video, let's say that all 3 ratios are equal. All of them have equal weights. Now, this is entirely at your disposal. Whatever you want to put, this is your assumption, okay? But at least in this model, we don't have a lot of assumptions as in DCF model or as in DDM model. Only a few assumptions, but still you should decide yourself what weights you're putting over here. Now, the higher the ratio over here, the better it is. Now we will be comparing those ratios to the closest peers. And that's why I'm using formula. Remember, the higher the ratio, the better it is. In this case, Apple's net income per share is lower than the industry average net income per share. So this is not good. The shares in the industry, some of them look better than Apple shares. That's what it means, basically. That's why I am taking this and dividing it by this one. You can close the parentheses to make it look beautiful, and then we multiply everything by the weight. We get 0. Yes, 0, because if we enlarge it over here, you see it's the percentages. Then we do the same thing for other parts. Over here we basically divide this ROI trailing 12 months for Apple on the industry average trailing 12 months and multiply by the weight. And we get this coefficient. This coefficient is the sum of all those three results. Now what we're gonna do, we need the price of the Apple shares. Again, on the Financial Modeling Prep website, there is a great guidance. You can copy this formula for live prices of Apple shares. Let's return to our Google spreadsheet. And now you can place whatever you want in the empty cell, this formula with, again, with the Apple ticker. And once you press enter, you see Apple ticker and the stock price. You can copy the stock price here or use it from here, it doesn't matter. I input the share price 195.56. This is their live price. And now we have the stock target price based on these assumptions. But again, you need to use more ratios. I'm using 3 ratios. That's why we are having this result. But more ratios you use, more accurate your model will be. Basically, what we have here is you can see this formula, very simple formula. We take the share price and multiply it by this coefficient.